You probably heard about it before. It's been in the news ever since June the 1st. So I wanted to check back in and seeing that it didn't change for anybody. Did they find out that, wait a minute, we're still struggling with the realization? But let me just tell you like this. If you haven't heard about Yotta, where the story came out back on June 1st on CNBC, where Yotta itself, this is what the story reads. Savings app CEO, which is Adam Moelis, says 85,000 accounts locked in fintech meltdown, will never imagine a scenario like this. Now, back in 2019, Yotta was kind of put out there by all the different people that do social media. You know, not me. I never mentioned Yotta at all. I never referred Yotta to anyone. But a lot of different people that were um, people who were YouTube promoting products constantly. The next thing, I mean, you got Grant Stuffin. He was part of the people who actually made the announcement, along with some other popular YouTubers who are always, I like, kind of taunting the next latest thing that you should be doing here on YouTube. Well, here we are now on the 13th, 13 days later, and $112 million in savings have been locked out of their accounts. I mean, this is users, 85,000 users who open up Yotta, which is supposed to have been a no lose mechanism to save for rainy life days. Now, Adam Moelis told CNBC, and this was back on June 1st, the disruption caused by the dispute between fintech middleman Synapse and Tennessee-based Evolve Bank and Trust has upended live, Moelis said. We never imagined a scenario like this that could play out, and not one regulator would step in to help us. That's right. And you say, well, what means one regulator? Today, you can still go. You can log on. You can go to Yachtas, which I would not suggest. I don't promote that you do. You can go to Yachtas and you can click on it. And now, one of the things that have changed, again, the crisis really started back in May. But this meant just tell you that Adam Moelis, the co-founder of the fintech startup named Yotta in 2019, he wanted to give Americans a new way to save money by helping them cushion the ups and downs of life. Instead, his company has inadvertently been a source of deep pain for thousands of customers who relied on Yotta's accounts to receive paychecks, pay bills, and save for emergency. The crisis began on May 11th when a dispute between the two Yotta banking partners, fintech middleman Synapse and Tennessee-based Evolve Bank and Trust, led to a lockup of accounts at Yotta at least 24 other startups. Synapse declared bankruptcy earlier this year after several key clients abandoned the firm amidst disagreements over the tracking of customers' funds. What does that basically mean? Money's coming up missing, and Synapses filed bankruptcy. Now, you would think that Yotta would go ahead and have a backup plan, being that Synapse, which is a fintech middleman, was complete. They filed for bankruptcy. So that means any money they keep getting access to is actually, whether people want to realize this or not. I mean, if you keep depositing money in my bank account and I file Chapter 7, okay, and in the process of me filing Chapter 7, my creditors all go after what I have in my account, you can best believe that money is not coming back to anyone who deposits that money in my account. Well, this is the same scenario. For the past several weeks, Yotta's 85,000 customers with a combined of 112 million in savings have been locked out, and that included Moelis as well. This disrupt upended lives, and many people are frustrated. Now, you got to keep in mind that what they did is they circumvented the system, which means Yotta actually it was a fintech company with this technology, again, using a computer-based app from your phone that you can get around, and they circumvented what it would be traditionally for savings and loans. I'm gonna be very interested to see exactly what the state where Yotta is incorporated in, what they do about this, because I keep checking back to kind of see the whole. I mean, how is it going, guys? But Yotta itself is still people are signing up for Yotta's accounts, and what they turn it into is similar to like a solitaire smash. And again, Adam recently came out and he spoke, and this is what he put out there to the general user. Adam, and this is what he put out there recently, and this is within the last 10 days. Adam Moelis, you can this is what it says: you can make your own moral judgment about whatever you want, and that's fine. But the issue that matters is that our customers have been able to access their funds have not been able to access their funds for nearly 3 weeks due to a dispute between Evolve and Synapses. It has been helpful if we focus on the issues and spread awareness. However, got to keep in mind, they pivoted. Their original program was a savings. Now, when you go, it's almost like a solitaire smash, almost like even when you think about it, which a lot of times people say it, what is that game that, I mean, every time you look at it, this is a game where it's at the end of the day, it has some tokens that you can get a royal match. So, and it got almost like a casino type base to it. So I thought it was interesting. I keep checking back. Personally, I don't know anybody who had a Yotta's accounts that are not just YouTubers. Yes, but I don't personally, as far as they talk to me about it. No, but I thought it was so interesting because when you think about all of these fintechs, and some people want to be early adapters. They say, you know what, let me be an early adapter. Let me jump right in and let me just go through the process of, trying this new thing. It's supposed to be a savings, it's supposed to help. And at the end of the day, you actually get involved in something where uh, there's not part of the savings and loans. They circumvent the wheel. You find out that over $112 million actually are just gone. You say, when it's gone, it's locked from a standpoint. But at the same time, Synapse is filing Chapter 11, bankruptcy. And money's still flowing through. And most people don't realize this. When you file bankruptcy, personally, I never filed it before, but for those people who have, when you file bankruptcy, you still have transactions going through. You file, and the reason you file is for protection underneath the state and underneath the federal government, so that you can continue to operate your life. Your debt is completely higher than your income and expenses, and this puts people into place. But for all of you users out there who deposit, I'm terribly sorry for those 85,000 early adopters who put money in Yottas. And Adam Moelis, the only thing they have done is they have turned it into a casino, which is far away, and I mean far away from what it originally was, where it's supposed to be. I mean, it's far away, and even to the point where you say to yourself, well, okay, well, what do I think? What do I think? Well, it's going to be a tremendous legal battle, if you want me to be quite honest with you, because when you look at a situation like this, and with this new technology, and it reminds me back in 2000, guys, you may not realize this, but back in 2000 .com era, there were so many different companies that were coming out of New York, California, Connecticut, Massachusetts, the Boston area, and it was these young, intelligent college kids that was inventing the future. And this was back during the .com era. That was that 98 through 99. That's what we call the tech bubble took place. There was a lot of companies that did not have a solid plan. And because they didn't have a solid plan, they put many, many people who actually acquired interest. Now, the thing about Yotta is people actually bought in. So this is an app. They also got investors to get involved. There were several YouTubers that are always taunting things. And again, I did mention to you guys, one of them, the gentleman that I said earlier, they're just taunting this. Now, here's the difference that you need to know. And this is boom to bust. And this reminds me so much of .com. And I keep telling people, be mindful of these fintech companies, because their products and services, a lot of times, they're not being, I mean, when you open up an account, they don't tell you be careful with Yotta. It's very risky. They don't even tell you that. But the thing about it is you can now go online, see Yotta, open up an account, and then you open it up, it literally looks like different forms of casino games going around. You got to buy tokens, and the more tokens, the tokens really don't, I mean, you can't buy Yotta Cash. It's just that when you buy tokens, they give you free Yotta Cash. And that's the reason I said it's like a solitary smash. Because at the end of the day, the whole thing about a lot of these games now that you have on your cell phone, and again, it doesn't matter if it's solitaire smash, and they tell you can use PayPal, you can use Apple Pay. It got even these casinos that have blackjack. They're circumventing. These are fintechs. It reminds me so much of 2000. And what you're having is so many people don't realize it. They give you that free cash, Yotta Cash, because you're buying tokens. However, it plays against you overall. The goal was to save. It really wasn't to gamble. Even Adam Moelis came out and says, yes, we are pivoting away, and we had to pivot away because of this situation. But let's look at the boom to bust. The ongoing mess has exposed the risk in the corner of fintech that grew into a prominent during a boom in the venture capital's investment, and is likely to reverberate for years, and regulators increase scrutiny on the space. The so-called banking as a service model allows customer fintech companies to quickly launch savings accounts and debit services, with fintechs like Synapse acting as a bridge between the startup and the FDIC-backed banks ultimately held deposits. The harder the dispute between Synapse and Evolve Bank involves a foundational function of finance, keeping accurate ledgers of the transactions and balances. Synapse and Evolve disagree on how much of Yotta funds are held at Evolve. and how much are held at other banks that Synapse worked with. Synapse has not responded to a request, and Involve has blamed Synapse for the breakdown. Now, let me just tell you this before I make this last statement and bring this video to a close. See, one of the things that the banks have to do when it comes to the FDIC, they got to have a certain amount of that money in deposit. And what's taking place is they're being leveraged. And they're being leveraged in a way where I would say this is probably as close to a different form of leverage. When Apple came out with their Apple Bank, when they had the backing of Goldman and Sachs, now Apple went out and made an agreement with Chase Bank. So now Chase actually backs it. But Goldman and Sachs were like, hey, wait a minute here. The way that this kind of worked out with this savings and this account that you did, we're losing money on this hands and fists, and you using us as leverage. This is similar to what Evolve Bank is saying. Bank and Trust is saying, hey, look, you guys are utilizing us. The deposits that's required by the FDIC and what we require to continue this relationship, you're not willing to give us. You're leveraging us, and you're putting money everywhere else. We can't check it, but we got to back it, which means we're totally exposed. This is what be similar to doing a naked short sale or a naked short sale. And that's pretty similar to that, where you're placing yourself exposure where you got unlimited upside risk. This thing can go from $1 to $5, you lose or blow your tire money up. But most importantly, you need to be aware, because this is not just the only one. A lot of these fintech companies that's offering savings account, you can see it everywhere. Doesn't matter where you're at. You may pick one of these, what I'll call some of these apps and tell you, hey, you get your free credit score. Check us out on list. I'll give an example. I think there's another one out there somebody had mentioned. They sent me to a text, and in the process of them sending it to me, it was okay. Credit Karma. Now Credit Karma offers, you get a checking account. You could even you can even open up a broker's account. See, all these fintechs are leveraging in, but here's the problem though. When Synapse filed bankruptcy, that should have been the end of the conversation. Nobody should have even been thinking about it, because that should have been a dead warning. Now Apple switched over from Goldman Sachs. It wasn't the same situation, but they went to another bank to back them. Goldman Sachs started it. They backed out. Chase took over the position. And that's where now for any type of Apple Pay or any type of Apple banking, that's how it is. Well, with this company, that's not the case. They can point fingers back and forth. But to this day, people have still not got access to their savings. And now the way that Adam Moelis allowed them to get access is for them to gamble what they supposed to have been savings. And again, they have no mechanism to literally, now there's still it's a one-way transaction, which means you put this money in, you're not getting it back. Synapse Bank has mostly ensnared lesser known customer fintech firms, especially after larger fintech players, including Mercy and David, fled the Synapse platform in the past year. That has left Yotta, which encourages users to save money with free weekly lottery-style sweepstakes, as one of the largest companies to be affected. Accounts of crypto firms like Juno and Copper, which offer savings accounts for families and teens, also have been frozen. So this is the reason that I brought this out, is because I wanted you to see that this is going to get bigger. You got crypto, you got Copper, you got Juno, you have Synapse has filed bankruptcy. They can withdraw this money, but if you right now, if you think about it right now, you need to really check and figure out who is the middle person in between a lot of these transactions, because this is where it's gonna get messy. Again, Adam Moelis, the co-founder, smart guy, sitting in the college dorm room, decided to invent the next thing that changed the way we operate. And the last we know, let's just be clear. Now we know about Swift Bank. Swift Bank actually serves like Synapse does for a lot of different people. And, Swift Bank backed a lot of these fintech companies. And, regulators came hard and they intervened with Swift last year, actually 2 years ago, they intervened with them, and the banking region crisis threatened, they just tore up everything. So if you right now are still being an early adopter to a lot of these fintech saving programs, you may want to get advice from your traditional banks. And that's really what I wanted to put out there, guys. Be very careful. Stay away from Yotta. Stay away from Juno as well. Copper. Those Bitcoins are also associated with the same type of transactions. All of these users. Now, if you want to look at the total, there's 112 million that have been affected by Yotta by itself. But if you put Copper and Juno, we're talking about well over $200 million, not 200,000, because it's 112 million already locked up. We're talking about over $200 million that people don't have access to, and they're not going to have an answer to. So it's probably going to be a lot of hearings, and as you know, I hope that if you were one of the people who were taken advantage of because you just listen to any of these YouTubers that are telling you, hey, you need to do this right now, it's a great opportunity, guys. A lot of them, I mean, we've seen it back when the crypto, when we talk about the token side of it and regular crypto, not Bitcoin, but the regular crypto industry crashed during the COVID. We saw that take place. And one of the things was that there were a lot of celebrities who got paid to actually promote so that they can actually get paid at your expense. This is similar things. So watch these YouTubers, do your due diligence and don't be taken advantage of, and stay completely away from Yotta. Until next week, guys, you guys have a wonderful and amazing day.